Good evening, everybody. Mike Bakke here with the Princetontrader subscriber evening webcast. So, I hope everybody had a good holiday weekend. I haven't had a chance to talk to you guys since last week. You know, and I've been putting it in the commentaries. We made this gap up at 1369, going right into Sunday night. It was the first tick Sunday night, top tick Sunday night, right out of the box, and it's been downward pretty much ever since. Haven't been able to take out that level. So 1369.5 until further notice is the top of this move. Okay, we had a couple nice trades today. I haven't switched the pivots yet. I'm gonna pause the video and switch them. So I've got everything. I want to replay today a little bit, and then we'll switch and talk about tonight and tomorrow. So what I've got here is a 5-minute chart of the ES, and what I want to discuss is today's trade. So we established the opening range in the morning, and then we bounced just really violently off of 1358, and right in here it feels like, well, we're going to 1373. Then we kind of flatten and grind out. I didn't call a trade out up here simply because this 4-hour nightmare of a meat grinder really could have just kept on going all day, and I don't really want you guys getting chopped up like that. It looks great, kind of Monday morning quarterbacking it here, saying, oh, look at this fantastic 5-minute doji that almost touched the daily pivot up here at 1366. But I mean, that's just not reality. I mean, you could have traded that, and then you would have been going nuts until until about 1:30. So we broke, okay, and what we got was a move down to this double pivot level, 3-day and 9-day pivot, basically 1357, 1356.5, and the lower vol, which came in at 1356.25. So the whole thing set up for a move into 1356. So when we get these moves, we don't want to anticipate them, but unless you see a crack, and a deep crack that holds, you have to be ready to enter here. So we held, we came down a little bit, but we're essentially holding. Now, don't get me wrong, this is painful here, but what you want to do is you want to set a reasonable stop below the lower volatility level, a 2-handle stop, put your stop in at 1354.25, and your stop's down here, and it doesn't get touched. So we got a nice little fade bounce trade into the close here up to around 1360 on the E-mini. So I know some of you took it. I got some emails, people that grabbed that one. Excellent. And if you're new, this is a process. It's going to take time, and the reason I go through these things is to show you what we're looking at, because this happens not every day, but pretty close. So the setups that there's only 5 or 6 real setups that we have using volatility levels and pivots, and the simplicity and the consistency of those setups is what allows us to be confident when we take a position and make that position profitable. Okay, so that said, let's look at gold, because gold was a picture perfect setup. You can't draw. You just can't. You can't make them up any better than this. 10:30, we break above the upper volatility level, 1753.2. Right in this area here, I called bias and said to look out for a retest of the upper volatility level, and that you could get long with a stop underneath. And until you really feel comfortable trading gold. And I know some of you trade gold every day, but for the newer trader, for the novice trader, this is a very volatile product, and I hesitate, unless you really have traded this for a little while and you're comfortable with it, I hesitate recommending consistent dives into gold futures. But in this situation, if it's going to set up like this, I'll put the trade recommendation out, and everybody can decide whether or not they want to go ahead and do that. So we got a perfect retest, and this could happen in the E-mini or oil or anywhere. So it's just a nice example of a break above the level, a bias, and a retest, and we touch it, and it really never looks back, heading up to 1761. We consolidated for a little while, but if you're rolling up your stop from 53, if you're rolling your stop up to even 1756 even or 55.75 on a break of 56, you don't get touched, and you get to ride most of the move. Now, I want everybody taking profits all the way up, but you don't have to take it all off after a couple of dollars. So this was a nice $6-7 trade in gold, and I hope everybody that was comfortable with the trade took the trade, because it's set up very nicely. Okay, let's talk about the setups for tomorrow. Okay, so here we are. Let's talk about tonight. This is a 5-minute chart of the E-mini. What we have set up going into tomorrow is a daily and 3-day pivot zone. And I alluded to this a little bit in the overnight report, which I sent out earlier, right at the 1361 level. Where is resistance tonight? Right at the zone. Okay, so that sets up 2 overnight trades. You can fade or retest to this level if it can't get through the level. And when I mean it can't get through the level, I mean it can't get through 61.25 and a couple of ticks. If it makes a real ugly topping candle there and comes back down, you can short it. Keep your stops pretty tight. I don't want anybody losing a lot of money overnight. If your stop is more than 2 handles, that's a personal decision. Usually when I put trades on and I know that I'm going to sleep through those trades, my stops are at most 2 handles on the other side of very established resistance. So basically, if it goes through and it hits my stop, then I'm definitely wrong. Okay, so if you do take these trades at night, keep the stops tight. Now, if we get a break above this level, say we break, and don't anticipate the trade if you're going to take the short trade. If it breaks through, say we pop up to 63 half to test the opening range high. If we move back down to test the pivot zone, it is much more likely than not that former resistance in here will become support out here. Okay? Resistance becoming support and support conversely becoming resistance is, in my opinion, a very powerful tool in technical analysis. Okay? So if it comes back down to test this level, you can get long with a stop underneath the 3-day pivot. Okay? So 1360, 1361 is going to be a big level tomorrow. Let's go out to a daily chart. Let's get a look at the big picture here. Okay. Here we are. You've got this doji up here from Friday, and you can kind of see we're starting to give it up a little bit. However, the bears have still got to get down below 1333, which is the first fib level from 1369 half to 1195 half, which is, as it stands now, the whole move. They've got to get below 1333. They also absolutely have got to get down soon and break the pre-non-farm payroll price of 1322 to 1323. If they can do that this week, that will really put a shock into the bulls, and the bears can kind of have the run of the place a little bit, probably down to these fibs in here, 1303, 1298. Those levels are likely to get tested. The next thing that I'm looking at is what happens when we test this green line here, the 20-day moving average. That's going to happen either as a function of time, as the 20-day moving average continues to extend upward, or as a function of price as we pull back. So time and price are going to bring this market in touch with the 20-day moving average. How it reacts at that point remains to be seen. I would imagine that the first trip down, you're going to get a little bit of a bounce there, at least in the micro intraday trading world. But how it ultimately reacts will be determinative, I think, of the next 30 days of trading or so. Because here on January 30th, we touched the 20 and we made our move. If we get back down below the 20 and say we test the 20 from underneath and we can't get it done and we move lower, then I think that opens up a trade below 1300 down into the 1200s. I'm not one of these people that's sitting here and saying, we're going to have S&P 1050. That's nonsense. But I don't think that S&P 1250 in the first half of the year is out of the question if we can't get back above the 20-day moving average. Okay? Because in the very big scheme of things, here's your 200-day exponential moving average, 1259.15. This uptrend, the ultimate uptrend, from back at 1068, and you can even take it back to 666, the ultimate uptrend can test all the way down to the 200-day moving average and hold and maintain its uptrend. So, looking at this chart, we're really extended, guys, and a little bit of a pullback here. It's good for the bulls because you need to reload and everybody needs to take some profits, and it's good for the bears because they need to get their work done. So it remains to be seen what's happening. But what I do see is up here we're starting to roll over a little bit. Okay, but it remains to be seen if this is just going to be a 3 or a 4 day blip like we had down here, or to test the 20, or something a little more meaningful below the 20. Okay, so I'll be out with a morning report. Volatility levels will be on time. For all the new subscribers, welcome. This is a very interactive process. If you guys have questions, anything to do with the service, any questions about the service, any thoughts, any ways I can make it better for you, email me. If I have to do a 2 or 3 minute video to help get a point across or to show something to you visually, I'll absolutely do that. I am here for you guys. Okay, you're putting up your money, and I'm here to teach you this stuff, to give you some good trades, and to make it an interactive and worthwhile process for everybody. Okay, so have a great night. I'll see everybody in the morning. Trade them well, guys.